and there's an FAQ which is clarifying you are not eligible, whether I'm eligible or not.
This accumulation may become a problem which will continue for longer. So one interesting decision I think was in the case of input means anything you buy. Just the fact that the input and output have different rates, that is the end of it.
Hello and welcome to GST Dialogues. With GST 2.0, many rates have been revised. Now that my products have revised, whether that same product still I can be eligible for inverted duty structure is another question which is buzzing around the industry. The products are same and there's an FAQ which is clarifying you are not eligible. Whether I'm eligible or not, throw some light on it.
So the idea is when a person is eligible for refund, the entire discussion is when a person is eligible for refund. Again, post the council meeting, again this FAQ is being circulated. They are referring to a circular. The FAQ, if you look at the FAQ in question number 10, so the specific question was on account of this change of rate from 22nd, there is going to be a scenario where the goods have been purchased at say 18%, but the sale from 22nd will happen only at a revised rate of 5%. So it is a natural thing that the registered person or the seller in this case will have a structure where his output tax is substantially lower as compared to his input rate. See, no business want to carry credit in their books. Business want to have a strong liquidity. More credit in the books means your money and funds are getting blocked. So obviously industry do not want such a scenario. Now when the FAQ has clarified that this particular scenario, though it is inverted in nature, it does not qualify as an inverted duty structure as per the specific provision of 54 subsection 3. So there they are saying this input and output cannot be the same. So whereby, because when you have purchased say a air conditioner at 28% from the OEM, you are selling to the consumer at 18%, both are the same product. So the argument from the department side is that when the input and output are same, boss, do not come to me for an inverted refund. That is the clarification given in the FAQ. I would not say it's a clarification, it's more of a view taken by the department. FAQ is basically department's view. Coming to the provision per se, provision does not restrict or exclude a scenario where input and output are same. It only provides for a scenario where the rates of your input are higher than your rate of your output, and that is resulting in a scenario where this credit gets accumulated in the hands of the taxpayer. So in this context, I think there have been enough decisions by various high courts. Okay, there are numerous decisions. Rajasthan High Court has given a decision, Delhi High Court has given a decision, I think Karnataka High Court has a decision. So one interesting decision I think was in the case of Indian Oil. So where they were purchasing this LPG in bulk. So LPG in bulk has a higher rate of 18%, and they were packing this bulk LPG in smaller cylinders for supplied for domestic use. So that was attracting a 5% GST. Obviously this results in an inverted rate structure. So the argument of the department, again as usual, boss, you purchase LPG, you sell LPG. One is bulk, one is domestic. So as per our understanding, you are not eligible for this 54.3 inverted rate structure refund. Court read the provision verbatim. Verbatim reading gives a clear message if the rate of input is higher than the rate of output, or the rate of output is lower than the rate of input. It does not say it should be a different input and a different output. That condition or an exception is not drawn in the provision. Number 2, court also made an observation. Even for this particular case, when bulk LPG is converted to domestic LPG, there are certain other products which this person will buy. It could be directly with regard to the packing of the bulk into the smaller containers, so the containers would have been procured, or even in the course of their business, they are actually procuring some inputs. So ultimately there will be a scenario you will find some inputs. Input does not mean that you have to go back to your central excise regime. The mindset that input means something which goes into a manufacturing process, I think is something done away with in GST. Input means anything you buy for your business, and that is being used directly or indirectly for your sale of the product. okay, whether it's a packing material or anything else. It does not certainly contain capital goods, so that is, I think, very clear. So once it qualifies as an input and your output has a lower rate, IDS refund is available to you. You need not get into the justification that it has to be a different product. So all said and done, whatever is the view of the department or the government's view in that context, I think industry has to be clear with the law. Any decision they take should be driven with the provision of the law, with the jurisprudence we have today by the various courts. I think there is another decision which specifically said it need not even have additional inputs. Just the fact that the input and output have different rates, that is the end of it, refund is available. So I think that should be the way forward, and we need not worry too much with regard to the IDS. I know it again has to go through the litigations route, but end of the day I think assessees are in safe range.